Okay.
I can just see your face.
Here we go. All right, I'll go ahead and get started. Hello again, Glitter. I'm Lowell Meznarich. I am a Color Street Stylist along with my wife, Bonnie. I'm meeting with you from Cut Bank, Montana. We're about 35 miles south of the Canadian border and 50 miles east of Glacier National Park. So real treasure, real beautiful place that we like to spend lots of time in. So there's my contact information. I've been doing tax preparation for over 39 years. My email is there, and should you want to speak to someone about this in more details in regard to your specific situation, my initial consultation is free. So reach out to me and I'll bring up this contact information later. Amber is recording this, so you will be able to look back at it if you would like. So adding a few more people into the room, into the meeting now. All right, so let's get right into it. One of the things that I want to share with you that's on everyone's mind at this point is the economic income payment. So the vast majority of people have already received that. If you have not, you can go to irs.gov. So hopefully that's the screen that you're seeing now. Let me bring that up then. Having a little technical difficulties here. Sorry about that. Yeah, of course they always work great during the practice run. Okay, so let's get back to that. So I'll try to share that again. Here we go. I think we've got it now. So here's the IRS site. It's irs.gov. And Bonnie, would you tell me, yes, we've got it? Okay. So irs.gov, and this is their opening page. And one of the very first things you see is get my economic income impact payment. You click on that and then scroll down a little bit and you can click get my payment. So if you're looking for it, wondering what's up, then you'll have some questions that you need to answer to see what's happening. And you're good to go then. One more to enter, two more to enter. All right. So use that as a tool. That's something you can look into, go to that same spot to look for your normal refund, for example, or to look at what's going on with your account. So a lot of opportunity to dig into your tax account with the IRS by going to that site. One thing to remember is if for some reason something's gone haywire, you do not get that payment, or you didn't get the payment in the spring, you're able to claim that on your 2020 tax return because it's actually a credit on the 2020 return. So there you just report what you received, calculate what you should have received, and the difference will be sent to you. The good news is if they've overpaid you, you don't have to send anything back. An example of a change where you would use this credit on your tax return for 2020 is if you had a child born in 2020, because the first payment looked for the 2019 tax return and the information there. If 2019 was not available, they looked back to 2018. The second payment that's coming in now, that is only looking at 2019. So neither scenarios would know whether you had a child born in 2020 or maybe a child adopted, those things that would increase your payment. All right, great. So let's move on. I would like to bring up another form for you to look at. So I'm going to give you maybe a little bit different education than you might have expected. We are going to get into what is deductible, but to get the best benefit from that, I'm going to walk you through the tax tables so that you can understand what is available as far as savings are concerned. One thing it will do is get you motivated to keep better records and to look at the things that you need to see. All right, so Bonnie, can you see the tax and rates brackets? All right, so here are the tax rates and brackets. And this is for the tax year 2020. And the lowest tax rate for all people is 10%. For single person, it goes up to about $10,000. And then over that, up to 40,000, it slides up to 12. So you pay that first slice at 10%, the second slice at 12, and then it jumps up to 22. Let's look at married filing a joint return. 10% is about 20,000, 12% over 20 up to about 80. And again, same thing, you're going to pay the slices in there. There's married filing separate, which is half what it's the same essentially as a single. And then here's head of household, which some of you may be. You're single, divorced, widowed, and you have dependent children, so you're going to fall into this category. So 14,000 to 53,000. All right. For 2020, we're going to get a slightly larger adjusted. Our standard deduction is slightly larger than it was for 2019. For single person, that's 12,400. For married filing joint, 24,800, 18,650 for the head of household. So why is that important? Well, let's take a look. Let me jump over to another one of my handouts here. All right. Going to end share screen on that one. All right. And bring up another. Are you seeing a new screen now, Bonnie? No. All right. Again, sorry with the technical difficulties here.
A new team being added.
And that was my beep. Okay. I watch a lot of these Zooms and get my continuing education from them. And I see now why they have a co-host to deal with things. Okay, do we have a new screen now, Bonnie?
Yes.
All right, so as I was saying, this is what we're building for. I want to demonstrate how important it is to take advantage of all the tax deductions that are allowable. So here's a hypothetical tax case. Let's presume that your spouse's wages in the first column are $110,000. As we saw in the standard deduction list in the previous display when I shared that screen, for a married filing joint person, $24,800. Subtract that, that leaves $85,200. That puts you into the 22% US tax rate. You'll see I've got the title here, Marginal Tax Rates. What that means is any new income is going to be taxed at that rate. So we have the 110, we've taken the first slice at 10%, next slice at 12%. Now we're over it into 22%. Any new income will be taxed at that 22%. As a self-employed person, which virtually all of us are as stylists, we pay what's called the self-employment tax. As an employee, if maybe you still have a job, you'll know that they withhold those types of taxes from you. They withhold what's called FICA. That's the retirement portion of Social Security. That's withheld at 6.2% from your paycheck. The Medicare is 1.45%. That's also withheld. They total to 7.65%. But your employer matches that. So they withhold 7.65, add 7.65, a total of 15.3% is paid in to that system, Social Security and Medicare. So as self-employed people, the tax code treats us as both the employer and the employee. But instead of charging us the full 15.3%, it ends up being about 14%. So in this example, if you're at 110,000 less the standard deduction, 85.2 taxable, you've got a 36% US marginal tax rate. Now, some of you live in states that don't have state income taxes. There's 7 states that are that way. 7 states that do not have it, and 43 that do have some form of income tax on individuals. But the average, California's top rate is about 13.3%. North Dakota, for example, has the lowest top rate at about 2.9%. But the average state works out to about 7% if you have about this much income. So 36 plus 7 is 43%. So that is the tax rate that you would pay on any new income on top of this $110,000 in our hypothetical. All right, so if we have a $20,000 profit from our Color Street business, 43% of that is $8,600. So that's actually the tax that would be owed in total on that if all these hypotheticals were accurate. The next column shows a smaller amount, 80,000 compared to the 110. Again, married filing joint 24.8 for the standard deduction and taxable income of 15.2. We're at the 12% rate rather than 22. Again, the 14% is based on the profit from the business. Using the same 7%, we have a total of 33. On a $20,000 profit, your taxes would be $6,600. So here's why these numbers are important. Here's a scenario for you. You've struggled with back pain. COVID restrictions have forced you to do much of your Color Street business from a chair in front of your computer. We can all identify with that. But the chair is causing even more back discomfort. So you need a new chair. Let's see what a really nice chair would be. So I Googled luxury back support office chair and found the highest price was $1,895. Now, if your marginal tax rate is the 43%, like our first column on the previous page, that chair, if it qualifies as a business deduction, you would reduce your taxes by $815. So the tax, in essence, subsidizes your costs. So what does that look like? The cost of the chair, $1,895, less the tax savings. Your true after-tax cost is only $1,080. So it's like everything's on sale. It's tax deductible. That's a good thing, but we need to be cautious. So here's something to think about for you. The Internal Revenue Code is clear in that business deductions must be both ordinary and necessary for the specific business. So in practice, they also add the requirement that the deduction be reasonable. So here's a couple examples. If a registered nurse is self-employed, she needs a watch. She needs to record things based on time. She maybe needs to take up the pulse of the patient. So a watch is both ordinary and necessary for her specific business. Is it ordinary and necessary for you as a Color Street stylist? Probably not. How about a Rolex watch that costs $12,000? Can that nurse deduct that? No, because of the reasonable requirement. It has to be reasonable. What's reasonable is a $10 to maybe $100 watch. What about a refrigerator? If you ask me, can I deduct my refrigerator? I would ask you some questions. What is your specific business? If your specific business is a Color Street stylist, then I would say no. However, if you are a caterer and you store food for your business in there, then absolutely that refrigerator would be 100% deductible by your business. So just to give it a little more detail, to be deductible, a business expense must be both ordinary and necessary. An ordinary expense is one that is common and accepted in your trade or business. A necessary expense is one that is helpful and appropriate for your trade or business. An expense does not have to be indispensable to be considered necessary. Now, some people have heard this saying before, that there are benefits in being self-employed, and it's the absolute truth. So now that you're a Color Street stylist and you're able to deduct expenses for ordinary, reasonable, and necessary items. You're even able to deduct expenses that you would incur even if you weren't a stylist. Here's a couple examples. Cell phone, purchasing the cell phone, your cell service, your internet service, the cost of driving to from the post office, office supply store, delivering nails to customers, those sorts of things, traveling to training. If you qualify for the home office deduction, you can even deduct a portion of the interest paid on your home mortgage, the insurance for your home, real estate taxes on your home, utilities for your home, repairs and maintenance for your home. Now, the home office brings some extra restrictions with it, and I've expressed those here. Basically, you need to use that space exclusively and regularly for your business in order to qualify. So here's a hypothetical case, looking at, again, those benefits of being self-employed. So I have a column for the monthly cost and then the annual cost. So cell phone, you had a cell phone before you became a Color Street stylist. And let's say that cost was $100. So annually $1,200. You paid that already. Same thing with the internet. In this example, $80 a month, $960 a year. And then just a quick lower amount, cost of driving to and from business-related trips, $60 a month, $720 a year. And then we get into the home-related costs. I did a quick calculation. If you had a mortgage balance of $250,000, 2.5% interest, 30-year loan, your interest paid that first year would be $6,200. Insurance, maybe $2,000. Real estate taxes, maybe $2,500. Utilities for your home, about $3,000. Repairs and maintenance, about $1,000. Total of $14,700. And if you use 10% of your home for your qualifying home office, you would be able to deduct $1,470 as an ordinary, necessary, and reasonable expense from on your tax return. So a total of $4,350. All of these expenses you incur whether you're in business or not. So this is that advantage. So in our previous examples, we looked at a 43% marginal tax rate and a 33%. If you're at the 43%, you would save $1,871 in taxes just because you're able to now deduct formerly personal expenses. 33% marginal tax rate, you'd save $1,436. Here's a couple other items that could go on this list. A computer, you had a computer before, maybe a printer as well. Furnishings, you have a desk to put the computer and the printer on. Filing cabinets, those sorts of things. Chairs, other office furnishings would qualify also, and they would be possibly 100% deductible when you buy the new ones. So think about this. I'll give you a real live example. This happens almost every year and sometimes more than once a year. I have a client that's self-employed like you would be, and I ask them some questions to try to get unpack all the deductions that they might qualify for. And I will ask them about driving, and they'll, scoff at it a little bit and wonder if it really would help and complain that it might take a lot of time. Well, let's say in this example that they drive enough to earn a deduction of $60 a month, $720 a year. If they're at the 43% marginal rate, 720 times 43 is $310 of tax savings from that. They might complain to me that it takes some time to do that. And I respond, let's say it takes you a minute to write in some kind of a logbook or use an app on your phone, 1 minute a day, 5 days a week, 260 days a year. Okay, and they'll nod and say, well, that's probably about right. So 260 minutes of your time, that's 4.33 hours, and you're going to save $310. $310 divided by 4.33 is $72 an hour. That's a pretty good return on the investment of your time. $72 an hour. Wow. You know, that's like $150,000 a year if you made $72 an hour. So again, I share this with you to motivate you to do your best to get every deduction that you're entitled to. Here's a great question. Can I deduct the cost of my Color Street nail strips? So I'll ask you a question first. What is the answer to every "is it tax deductible" question? And in my business as a CPA, the answer is the same for every single one. It depends. Just like the watch, what business are you in? The refrigerator, what is your specific business? And tell me more about it. So remember, again, the nurse and the refrigerator examples. So the case to deduct the cost of your nail strips must be thoroughly documented. For example, can you produce a narrative explaining how you use nail fees to demonstrate the use and durability of the nails, and screenshots that prove your use of them in marketing on social media? And the same for a video you might shoot regarding how to apply the nails. You are using those nails to promote your business. So in that case, I would argue that at least a portion of the nails that you put on your own hands are actually deductible. Now, a professional tax preparer like me or another CPA or enrolled agent can guide you through the process and advise you regarding your specific circumstances. You need a professional on your team. They not only help you with taxes, they're also qualified to advise you on other matters like retirement savings and wealth building and management. Why a CPA or an enrolled agent? They're professionals. A CPA like me has earned a bachelor's degree and also passed a rigorous 4-part national exam. He or she is required to maintain his or her knowledge by completing an average of 40 hours of continuing education each year. An enrolled agent similarly has passed a rigorous national exam and has a similar continuing education requirement. Remember, so much of what we do as stylists is building a relationship with our customer. This relationship, I believe, is critical to win them to Color Street nail strips and then recruit them to our team. You want to approach your tax professional in the same way. Form a relationship so they get to know you, your plans and dreams, so they can help you make the most of your financial present and future. So here's another caution. You hear lots of questions from those you're recruiting to join your Color Street team. Yes, help them all you can, but unless you're a tax professional, don't give them tax advice. I'm serious about this. Several times I've heard the comment not to worry about passing on the cost of shipping to your customer because it's deductible, so it's a wash. Well, it's only a wash if the tax rate is 100%. That doesn't happen. Maybe it's 43%. So you don't pass on $1 of shipping to them. Well, that's going to cost you $1, but you could have deducted 43% of that, and your out-of-pocket cost after taxes was actually only 57 cents. So pass those on. It is not a wash. So what I want you to do is give them the link to this meeting, tell them to ask their professional, or have them contact me if they like. Remember, my initial consultation is free, so there's no risk to them in engaging me in a conversation and going forward from there. So here's a common story to help back up these things I've said. In a short time, you'll receive Form 1099 from Color Street. It will report your earnings from the company in 2020. The IRS gets the same information and will expect to see that amount reported on your 2020 income tax return. If you come to me as a new client, I'll ask for the Form 1099 and for your other income and expenses. If you've done a great job of bookkeeping throughout the year, you'll provide me with a list and maybe some schedules. So here's an example. You say to me, my Color Street Form 1099 is $28,000. I made sales from my stock of $1,100. So my total income is $29,100. Okay. And then you'll continue. I went through all my receipts and the amount I paid out for business expenses is $4,100. Now I'll ask you for a breakdown of that because that's required on the tax return. And then you'll conclude my profit was $25,000. Well, that seems like a reasonable approach, but I've worked with clients who've participated in a variety of commission-based party-type sales ventures. Consequently, I know I need to drill down into the amounts reported on Form 1099. As you know, in Color Street, some of your earnings are not paid to you in cash. They're paid in the form of credits. Jumpstarts are paid that way. Color Street's required to include the Jumpstart credits in your total earnings from them. So in our example, let's say those credits for 2020 were $2,250. But we know that the credit was used to purchase catalogs, business cards, accent nails, etc. All those are deductible expenses and need to be added into the amounts above. So up above, we had $4,100 in business expenses. But we left off the $2,250, and that $2,250 was included in the $28,000. So very important distinction for us. So if my tax rate, marginal tax rate is 43%, and I do not claim that $2,250, I would be paying $968 too much in taxes. Now here's an actual example from 5 years ago. Had a client, they had a 1099 that brought it into that along with their W-2s and other information to the national tax preparation chain that they had used for years. After 3 years, they were recommended to come and see me by one of my clients. Now the national chain employee they use didn't know to ask the questions like I do. Fortunately, I was able to amend the prior 3 tax returns, and that $2,250 and some other expenses added up to a very large number. And in the end, I was able to get them nearly $8,000 in refunds because we did it right. So you want to do it right and have your taxes as low as possible. So Lowell, what can I deduct? Okay, let's get right into it. So my wife Bonnie and I had a table recently at a local event. It was the first thing that a couple things had been canceled that we wanted to do, and finally something actually came together. So it was fun. It was nice to get out. So let me bring up a photo of that. And we'll work out this photo, and I'll give you some pointers there. So let's see, not there yet. So still not there. Okay. All right, let me jump back over here. Okay, there is the, how about that?
There you go.
All right, so here's Bonnie's table at that event. So we'll start with the basics. There's her table. We're using that for business. That's a tax deduction. She's got a nice stretchy tablecloth, looked awesome. We can deduct the cost of that. Underneath the table, You can see the tote that she used to carry the supplies around. She has several of those. That's a tax deductible item. Here's catalog of the material, business cards, all tax deductible. A lot of these coming out from the credits. Here's the clipboard she used and the pen and the pages that she printed out for gathering contact information in exchange for entering them into a drawing for her for a free set of nails. Here's a basket she used. All these things are tax deductible. Here's some decorations she had around the trifold display that she had. Again, a great tool, 100% deductible. Lots of nails displayed there. There's a little snowman that was a gift from my grandson, so we can't deduct that. But the other decorations we can, like these LED candles. Here's some pages that she printed out. So the paper, the laminating, those costs are tax deductible. Here's a little information on the payments that she received, that she's able to take. And here's something for the Square service that she uses. So the fees that they deduct or credit card percentages, those are business deductions as well. And then some other papers here on the side. So that's a great start at explaining how that worked. We drove to the event, those miles are deductible. We paid for the opportunity to be at to have a table there, that's deductible. Here are some sample packets that Bonnie put together. She bought the little sleeves for a few cents a piece, slides in the accent nails, a business card, an alcohol swab, all those things tax deductible for you. I mentioned travel before. If you're traveling for training, that's tax deductible. All right, so let's look at another list here that will maybe shape it out a little bit more for you. So let me get off of this one. And we'll go back and share a different screen. So again, here we are trying to get where I want to go. All right, so here's a list that gives you some basic information. So we've talked about some of these things. Here's advertising and promotion. If you're buying Facebook ads in another way, putting an ad in the paper because you're going to be at an event, flyers, those things are deductible. If you have a website that you're using, promotional signage, business meals. If you treat a customer or potential customer to a meal while you talk about your business and try to make a sale, that's deductible, whether the sale occurs or not. If you have employees, you can purchase a meal for them, and that's deductible. Business insurance, business interest and bank fees. So I mentioned Square and merchant card fees, those are deductible. You have a business checking account, savings account, those bank fees would be business deductions. The business use of your car, there's some special rules for that, that we could go into. If you wanted to talk to me after the meeting another day, or you can ask your tax professional for advice there. The cost of goods sold, of course, that's the purchase of your nails. Those are things you have for resale. Depreciation of items that you might buy that are larger. Virtually anything we'd be talking about is probably being expensed in that first year. And then here's some of those home office items, that internet, rent, mortgage interest. We're going to take that percentage of it. If you have a 10 by 10 office, that's 100 square feet. Your total square footage is 1,000. That's a 10% home office. Homeowners, renters insurance, repairs, real estate taxes, and utilities, as we talked about. Legal and professional fees. So what you pay to your tax professional to prepare your tax return, that's a business deduction. Before, it wasn't when you were not in business. You need legal advice, or you're having some bookkeeping help. If you have a virtual assistant, those things fall into here as professional fees. real estate taxes if you have your own, an office outside of the home. And then any wages and related expenses to wages, telephone and internet, and then travel. You go on work trips, training trips, lodging, meals, the mileage, those are deductible items. Again, utilities, we talked about that with the home office. So lots of deductions for you to claim. And again, I hope that the excruciating detail that I went through in regard to the excruciating detail that I went through in showing you how those marginal tax rates work and how that can really save you some money was valuable. So I'd be open for questions at this point. If we've got about 10 minutes for that. So if you can, let's see if we can, I can unmute you. So if you want to, I see a few videos, you'll have to raise your hand and wave at me, and then I'll unmute you and you can ask your question. Okay, there's Jen. Let me unmute you. There we go. How's that, Jen? Can you hear me?
I can.
Go
I
ahead with your
appreciate
question.
all the detail that you did go into. Coming from my dad was an accountant, so a lot of it sounded familiar, and it is a pain in the butt to keep track of all this stuff. If you rent an apartment, you're not owning a home. Like I noticed that you said like owning a home and all of that, like
Right.
all of that type of stuff is like, I don't have a room for my office per se. It's just a corner of my living room. Is that still the same? Like looked at the same, or because I rent, it's basically nothing? Or
No, the rent or ownership do not affect it. The critical factors are, is it exclusively and regularly used for your business? So the regular is a given. You're going to be conducting business there. So as far as exclusive is concerned, that's the idea is you have several bedrooms, 2-bedroom, and you're in one and the kids are in the other. But when they're off at school, you're using their room to set your laptop up on a folding table and go to work. That's not exclusive use, so you could not deduct that. But what you can do, it does not have to be a separate room. You can take that corner, set it up with your desk and your chair and your computer, printer if you need it, take a photograph of it, measure that area, so maybe it's 5 by 8, and you've got 1,000 square foot apartment. That would give you 8% of your rent as a business deduction. You just want to make sure that it's exclusively used. So you don't want the TV to be on top of the desk and the family circle around that area. But yeah, that still works. So you take your rent. I had, for example, the mortgage interest of $6,200 in taxes and insurance. If you rent, you would take your rent for the year and the renter's insurance and the utilities and take that 8%, for example, as a deduction. So a photograph that you have in the record. So I just had that happen with a new client today. I asked for a photograph of the office and the square footage. And so I have a great photograph that if the IRS asks about it in the future, I have it to show. It's clearly an office. It's not a bedroom. So it works very well.
okay,
Thanks for the question.
that was my
Go ahead.
first question. I tried to write them down as you were going through. I think I kind of understand this part, but do you have to file your business stuff separate than your personal stuff because you are a 1099? I think that goes with your personal stuff, but whenever you got into the business expenses, that's where I got lost.
Okay, yes. So the business, if you're self-employed, like virtually all of us will be, we'll get that 1099 to us as individuals, and we'll report that on Schedule C, which is one of the pages that's attached to our personal tax return. So we do just file one tax return. The business is reported on a separate, 2 separate pages from page 1 where the wages and interest would go. So no, not a separate tax return, just more another schedule attached to the personal tax return.
Okay, so I'm definitely thinking, like, I normally do my own taxes because it's just me. But with all this stuff, like, I wouldn't know all those questions to ask or know what's deductible and what's not deductible. So
Right.
I'm thinking, like, definitely go get my taxes done.
Yes, I would recommend that.
Okay, that's all.
Thank
Thank
you,
you.
Jen. Have a
I
great night.
appreciate it.
You're welcome.
We've got some questions on chat.
Okay, and I've got a couple questions Bonnie tells me on chat. And so let's take a look.
About the list, they're recording this so they can come back.
Okay, yeah, so regarding, can I provide that list? Amber has recorded this for you, so take a look at that and watch that, right toward the end. Are our Color Street website fees deductible? Yes, I should have mentioned that. That's a great question. Absolutely, those are deductible. All right. Okay, that's all the questions that I'm seeing there. So I'm unmuting Amber here, if it cooperates. Doing my best, Amber. Okay, I can hear somebody there. Okay, unmute all. Hey, Bonnie, say hi.
Hi, what?
Okay, there's Bonnie unmuted. All right, so I'm sorry, Amber, I'm not able to unmute you at this point. So if we can't hear you, then put something in the text or in the message there for us in the chat. So it's been fun to talk to you about taxes. This is something I really enjoy. And again, my first consultation is free. So you've got my contact information from the very first slide. And yeah, just let me know if I can be of help. I enjoy working with small businesses. So it would be a pleasure to have some more Color Street stylists as part of our family. All right, so we're up to the end of the Zoom now. So again, thank you. Blessings to you for 2021 and your business and your personal lives. Have a great night. Bye now.
Bye.